Hey guys, Rob Mitchell here. Thanks for joining me for a mini day trading webinar on NinjaTrader day trading systems. I'm going to share with you some secrets of momentum and how to build a really cool day trading system with it. This video and the series covers broad trading concepts that make a difference and more. First off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. In this video, I'm going to share important day trading concepts, advice, and secrets, tips, and etc. that can help you to up your trading game. You can benefit from this concept that we're going to cover today, whether it be in the E-mini S&P futures, crude oil, or any reasonably volatile futures market that you can day trade in. It involves aligning yourself in a positive way with momentum cycles. I'm also going to show you some cool ways of understanding momentum and momentum zone systems. You can also use this method to understand other key market concepts. And that is the case with almost any video you'd see on this channel, is that it's really sharing with you concepts that can be used to have a deeper understanding of the way markets move and trade. Yeah. Now, previously on this channel, I did a video on momentum dot theory. How does momentum turn with respect to the trend, counter trend, and consolidation? And this system that I call dot theory, or dot theory, can be used to really understand or create pattern classifications of what it is that the market is doing. And this is really cool because you can understand what the market is doing simply by looking at the smart momentum. In this video also, consider what happens when the smart momentum comes inside the half out of bounds lines. We call this orange theory. We're going to look at a chart in just a minute. That's a zone system for momentum. Zone systems are some of the most powerful trading systems ever created, but you can also apply it to indicators. This is an example of applying a concept in this video to other things. And we're also going to look at some details as to how you do that in a moment when we look at the chart. What kind of information is this that we're going to be looking at in a minute, and how can it help you? That's the questions that you want to be asking yourself as you watch this video. In today's video, I'm going to be using trading system concepts using a 4-quadrant trading system design approach using smart indicators from IndicatorSmart from the trading room pack and beyond. And you can learn more about those at IndicatorSmart. Now, what happens as the momentum comes inside the out of bounds midpoint on a chart? And we're going to look at that in a minute. In this particular case, the smart momentum, I actually don't know what it would be for a different kind of momentum, but the smart momentum is a predictive momentum indicator from IndicatorSmart that we've been using for over a decade in our trading rooms and in our systems. Now, what do early or late dots tell us about the trend, the counter trend, and consolidated structures? Now, I alluded to this in a moment. What will generally happen is as the momentum turns in a trend, the dots will come late. They'll usually come 1 bar late past a reversal bar, and they'll come on the continuation bar. And in the counter trend, they'll come early. And when you have this going on, this kind of toggling between the dots that you're going to see on the momentum and coming early or late, it tells you if you're trending or not, in addition to other things that were covered in that original video. And if you're getting them on both sides, it tells you that you're in consolidation. Yeah. It might not be small consolidation. It might be what we call cycling. Yeah. So what happens if you trade something like what I'm about to show you? With a non-encompassing ABC cycling. In other words, you wait for the market to be cycling ABC. Now, in last week's video that I provided on this channel, we talked about the implications of a clean cycling market, non-encompassing. Yeah, remember that video from last week. If you haven't seen that, I recommend that you do, because what we did is we looked at why markets trend from a statistical basis. And what we want to do is see where the prior leg went out of orange, and we're going to look at that in just a second. So these are the rules, okay? Probably a little confusing. I've already said them, but I'm going to enumerate them here as bullets, okay? You're looking for ABC cycle on the chart. That's higher green reversal bars or lower red reversal bars. And then you're going to look for the momentum to go out of orange on the prior. We'll look at that in a second. We're going to look for the smart momentum dots on the hook with the price, the ABC, that is inside orange, okay? And then you're going to look for that to happen on the first continuation bar or better, and you're not going to take any encompassing patterns as they were defined last week. Let's take a look at the chart. Let's take a look at the chart. So this is just today's ES, and this is a chart I've been using all day today, and that I use all day pretty much every day. And what we're looking for is we're looking for this to have gone out of bounds. That's outside the dot dash purple there on the prior run, okay? And then when it comes down inside, I'm looking for it to come inside orange. Outside orange, inside orange, or out of orange. I have an OOO there. I could call it out of orange, outside orange, O, R, O, and I-O. O-O-I-O, yeah. And, you know, you can make a song about it if you want to remember it, yeah. I'm not going to sing it because it might stick in your head and then you'll be mad at me, yeah. So, did this one go out on the last run? Yes, it did. It comes back, and then it comes inside orange right there, inside the orange. And it has to do it on the first continuation bar or the reversal bar. And on this one, did it come outside orange on that last run? Yes, it did. And you're just toggling, and then you come inside orange. And then you went outside orange, and then you came inside orange, but you did it too late, so you didn't take it. You could have taken it, of course, but it doesn't get marked with trade markers because it didn't happen that way. How about this one? It went outside, and then you're inside orange. You're inside this upper orange as it goes down. How about this one? And inside orange right there, yeah. And the market starts cycling the other way. So you get two higher greens. This one went outside, and in actuality, that one could have been marked. That one got missed. Okay, we put that one on there. Okay, and then this goes out of orange, and then this comes back inside. Out of orange comes back inside. Out of orange comes back inside. Orange, etc. Super simple. Super simple. Yeah, outside, inside. How about this? Ooh, encompassing pattern. Don't trade an encompassing pattern. You got to wait for it to cycle again. How about this encompassing pattern? Yeah. How about this? ABC, out of orange, and inside the lower orange. It's always lower orange going up and the upper orange going down. Yeah. So you can do those. You could decide to not classify those. No. How about this one? Down, ABC, A, B, C, which is the two lower red reversals, and it's inside, outside, inside, outside, inside, outside, inside, outside, inside, etc. Yeah. Usually, you could make this classification if you want to. If you got one that doesn't follow through or ends up being a quote unquote loser, wait for another cycle or a cycle in the opposite direction before you quote unquote take it. Yeah. How about this? Yeah. And outside and inside. Outside, inside. Yeah, etc. 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 How about this one? Actually, could have done that one, I think. Yeah, could have done that one. This one did not come back in. And so it went the other way. You could also classify that if you wanted to. You could say if it doesn't go out on that side and it does go out on that side, or inside orange if you wanted to. Yeah. And then these, you get pick up the loser right there. You get the encompassing pattern that blows that out. Typically, this yellow line is the high of the day. And I probably wouldn't have taken that, but it gets marked anyways. Yeah. It's marked anyways. This one could have been taken, actually. Yeah. Yeah. Outside, inside, outside, inside. Yeah. And this is how it is. Yeah. So you could stop the video and study those. This is an interesting thing that happened over here, because when the market starts trending like crazy, what's going to happen? The dots are going to come late. The dots are going to come late. Yeah. And that is a particular pattern classification. So this kind of a system is going to trade in normal market conditions according to its rules. And when the market starts moving very abruptly and very quickly, this whole thing happening in only a few minutes, it's probably not going to get it. Yeah, it's probably not this. This particular kind of a system takes advantage of normal cycling conditions. And if you wanted to get in on really abrupt moves, you would need a different system for that. Yeah, so, all right. Let's go back to the presentation. Okay, so a system like this, can it help to predict market movements? Yes, it can, by pattern classifying them. Yeah. Can it provide for defining of market normality? We just touched on that subject. Yeah. I've long said in these videos, you want to trade from normal to abnormal and not wait for abnormal and then hop on board. That's a really bad thing, especially for a new trader to do, is to get on the wrong side of the normal abnormal cycle, is another way I could put it. Yeah. Can it provide a system for trending or counter trending? Absolutely, that's exactly what it is. Yeah. Could you take these kinds of signals in a counter trending method? Yes, you could, but you want to parse it out as a separate system. That's what we're just doing. Trending system here. I recommend that you stick with the trending. If you watched last week's video, you'd have a pretty good idea why. Yeah. Can provide us with a method for trading on continuation bars. Now, usually when traders start new, they want to trade on reversal bars and stay away from the continuation bars. And this provides you with a method. If you have been trading on reversal bars for a long time, you might like to explore this. That's why I put this this in here. Yeah. You can then also use order flow using the trap trader oscillator. I didn't put it in this particular chart, but you can absolutely use it in conjunction with the trap trader oscillator and order flow for confirmation and signaling. Yeah. So yes, 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 yes on all these. This is a report for, I'd add a couple on there, but while we were doing the video, but and these are the rules that we had discussed, and this is the basic thing. Do I use this to show you this as a trading system? You could use this as a trading system. Usually, to me, a trading system is a little bit more than this, but this is a wonderful example of a viable trading method that could be used to, or components of what could be a viable trading method for you. Yeah. And so usually when I do these kinds of reports, what I want to look at is, well, what's the probability that it went 1 bar? What's the probability it went 2 bars? Or etc. In this case, 1.5 bars, 2 bars, and what? 4 bars. What's the probability it went 4 bars? Now, if this also locked at the profit trigger of 2 bars, and so these trades have the same win percent. Yeah, for these, it locks that in. If I were to uncheck that, we'd get a little bit different result. Yeah, we could take a second and look at that as long as we're here. I'll pull this up. This one, like I said, is going to be a little bit different because we added some trades to it. But if I were to uncheck this, and we had done this in the video last week, you'd see that you get 90%, 80%, and 63% for an overall win-loss percent of 78% for all three legs. All three legs. When you look at this, you get a win-loss ratio of about 1.3 to 1 and an overall win percent of upwards of 70 or so. Yeah, so that's how I will use this. So I have a basic statistical profile, but to me, this is more of a proof of concept. It's more of a proof of concept is the general idea that I want to get at there for you. Yeah, so I teach these and more advanced trading technologies, trading secrets, tips, associated nuances in my trading room daily. I try to share one of these each week when I'm able to do so. And so just wanted to share with you some advanced methods in momentum technology for a trending system. Yeah. Today's video took advantage of powerful features using the smart momentum and the smart breakpoints. The smart breakpoints provided the dots on the smart momentum for us that showed the inflections in the momentum. Today's video also utilized Smart Super Renko price bars from IndicatorSmart and other indicators from the trading room pack at IndicatorSmart. It also used smart trade markers that we use for the proof of concept testing and stat profiling. Yeah, so all right, guys, that's what I had to share with you today. Thanks for joining me for this cool video on trend trading with momentum and a momentum zone system, orange theory and dot theory, all to put together a lot of concepts that we've covered in past videos. If you haven't seen past videos, I recommend that you join the channel so you'll be notified when we post, but also explore the videos on here because it's just a tremendous amount of really cool trading concepts and viable trading methods and systems available for you here in any reasonably volatile market, whether it be the E-mini S&Ps, crude oil, gold, and or etc. So thanks again for joining me on this video. All trading resources in this video can be found at IndicatorSmart.com. Thanks for joining me, and we'll see you again on the next one.